بسم الله الرحمن الرحيم سبحانك لا علم لنا إلا ما علمتنا إنك أنت العليم الحكيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي ولا حول ولا قوة إلا بالله العلي العظيم رب يسر ولا تعسر أما بعد. Okay, in our previous session we have discussed cash flow statement for group consolidated cash flows, where we discuss the item of dividends from subsidiary. So the dividends from the subsidiary or associate companies that we have discussed in our previous session is, for example, dividends coming from a subsidiary would be an income, and intercompany transaction will not be recorded. But however, if the subsidiary paid dividend to NCI, then that payment of dividend to NCI is considered as cash outflows, and therefore it will be included in the cash outflow in the financing activities. However, for associate companies, any dividend received from associate companies will be recorded as cash inflows from associate companies. So we have to find what is the cash inflow from the dividends from the associate company. So that was discussed in our last session. So in this session, we're going to continue with the discussion of item which is particularly with regard to consolidated cash flow, which is the item of acquisition or disposal of associate and also subsidiaries. So let's take a look at acquisition and disposal of associate first. So associate company is not a subsidiary. Just to remind you, it's not a subsidiary. So anyway, even if it is not a subsidiary, if you have a disposal or acquisition of associate company, the cash that you pay as part of the purchase consideration to purchase the associate company will be disclosed in the statement of cash flows, and it will be included in the investing activities. Okay, investing activities. So this is with regard to cash outflows, okay, or for acquisition or disposal of associate company. Okay, disclose it in the investing activity. So the amount that we're going to disclose is only the amount where we paid for the purchase consideration in the form of cash only, not in the form of ordinary shares, preference shares, but cash or bank only. For example, we have H here issued a market value of 100,000 shares 100,000, and paid, the word here paid means that normally using cash or bank to acquire the interest in associate company. So the cash outflow from acquisition or disposal of this one is acquisition. Therefore, the cash outflow to acquire the associate company will be recorded in investing activities. The amount is only the cash involved, which is 20,000. So 20,000 will go into cash flow from investing activities in the cash flow statement. Okay, so that's all for associate companies. Let's move on to acquisition of subsidiary during the year. So we are talking about subsidiary now. For subsidiary, normally what happened here is that acquisition or disposal of subsidiary, only the cash paid. If you have acquisition or disposal, we are only concentrating on the cash paid, cash outflow or inflow involved, because we are discussing cash flow statement. Only the cash paid or the cash received, whether it is a acquisition or disposal in terms of disposal, you will have cash received, will affect the statement of cash flows. Okay, when acquisition of subsidiary, if you have acquisition of subsidiary during the year, what happened is that you have cash inflows and outflows at the same time. This is because when you purchase when you acquire subsidiary during the year, you are acquiring also the net asset of the subsidiary, which include inside the net asset is cash or bank account, also cash flow, in that case it will be a cash inflows. The cash outflow will be the purchase consideration that you have to pay. So in this situation, when you have disposal or acquisition, you have uh, one cash outflow, one cash inflow. The cash outflow will be in the form of purchase consideration, which is the cash outflow. At the same time, you have what you have is in the subsidiaries. Okay, in the subsidiary, the asset of the subsidiary also include cash in the form of cash in hand or bank, which means that the cash will be an inflow to the group. Okay, an inflow to the group, because here what happened is, if you H acquire a subsidiary, so H will pay a purchase price in the form of cash 150, for example here, and then inside the subsidiary balance sheet of the subsidiary here, there is item of bank, which is cash inflow to the group. So the bank will be included in the consolidated balance sheet. Inside the bank account of the consolidated balance sheet includes the bank account of XY here. Okay, the bank account of the group should include bank account of H plus S1 plus also XY, the newly acquired subsidiary. So there are money going out and money coming in. You have to find out how much is the cash outflow minus cash inflow and what is the net inflow. The net inflow is the one that goes into the investing activities in the group statement, cash flow statement, in the group cash flow statement. So basically that is the summary of the discussion on disposal and acquisition of subsidiary. So in short, when you have a disposal or acquisition of a subsidiary, you will have to find the net cash inflow or outflow, the net cash inflow or outflow. And this net cash inflow of outflow due to the acquisition or disposal will be entered into cash flow from investing activities. For example, the example given here is an example where you have H here acquire a subsidiary XY on 1st July and issued by acquisition of XY. H is issued 300,000 ordinary shares at the market value of 5 ringgit. So 300,000 times 5 ringgit, including of the share premium, that would be about 1,500,000 in the form of ordinary shares. And then the one that we are interested is the amount of cash that the holding company has to pay to acquire the XY, the subsidiary XY, which is 150. Now at the same time, this is the money going out. At the same time, there are also money coming in from XY in the form of bank or cash in hand in the balance sheet of XY. So it mentioned here is that on 1st July X5, the net asset of XY include bank balance. So inside XY, there is a balance of bank account of 240. So this will be an inflow of the cash to the group. Okay, because the group just acquired XY, so that will become part of the bank of the group. Okay, so there is money coming in here and money going out here. So the purchase consideration that H acquired XY, H pay ordinary shares, total amount of 1,500,000, but we are not interested in OSC because this is not cash. The one that we are interested is the cash amount, which is 150. So on acquisition of XY, H paid 150,000. At the same time, there is an inflow of cash from XY in the form of bank account, 240,000. So you have to find the net inflow. This is inflow, this is outflow. Therefore, the net inflow is 90,000. The amount of 90,000 here is the one that goes in the investing activities in your cash flow statement of the group. Okay, so with that, let's take a look at an example 2 here with regard to acquisition of a subsidiary during the year. So normally in your question, the question will give you the group financial position, which is the group balance sheet, consolidated balance sheet for 2 years. Okay, and also consolidated profit and loss for 1 year. Okay, and below there is an additional information, and also requirements by the question. Okay, so in the question requires you to prepare cash flow statement for the group. Now, before answering how to answer this type of question, before answering this, the first step that you have to do in your final exam, your answer booklet must first of all have a few pages that you have to prepare for the skeleton. Okay, the first part that you have to calculate or to prepare is the cash changes of cash and cash equivalent here. Okay, so the changes of cash and cash equivalent, we want to investigate how much has changes in cash and cash equivalent has occurred during the year. So what is cash and cash equivalent? Cash and cash equivalent, we have discussed earlier, include cash, bank overdraft, okay, and also short-term investment. So in this example, if you take a look into the statement of financial position of the group, you find out that there's only bank balance, no cash in hand, bank overdraft, or short-term investment. Therefore, the changes of bank balance here is an increase of 200. Okay, so bank balance, you have to prepare changes in cash and cash equivalent. Bank, only item bank is available. So balance at beginning 450, balance at the end 650. That means there is an increase of 200,000 cash inflow during the years. So this is the one that we're going to investigate. Where does this 200,000 inflow of cash comes from? Whether it comes from cash flow from operating activities, or cash flow from investing activities, or cash flow from financing activities. So we have to investigate this in cash flow statement to prepare cash flow statement. So this is the amount that you are going to get at the end of your cash flow statement, an increase of 200,000. If it is not the same, then there should be something wrong with your calculation. So this is the amount 200. Okay, 200. This is the net increase in cash and cash equivalent during the year, which is 200,000. Should be the same as the amount which is we have calculated here. Okay, 200, the changes in cash and cash equivalent. Okay, now so let's take a look into the question in more detail. So the first part here is to prepare changes in cash and cash equivalent. Second part is to prepare your cash flow. Okay, cash flows, the skeleton. So for the skeleton, you have to prepare the and then the subtitle, the categories of cash inflows and outflow, which is from operating activities, financing, investing activities, financing activities, and then at the end you have a net cash increase in cash and cash equivalent, and also cash and cash equivalent at beginning, cash and cash equivalent at the end. So this part here you can only directly enter in this section because you have calculated the cash flow here. Okay, you have already calculated here. Okay, you just put this figure up into here, here and here. Okay, so this is your cash flow statement, the skeleton. This one you just leave it blank. Okay, the detail item, because that one we're going to find out one by one. So first, when you have done preparing the skeleton here, what you need to do is to go through the additional information first. Okay, go to additional information. Here, the first additional information talks about dividends paid by H during the year, 320,000. So what it means here is that the dividends is already being paid. Paid here means already in the form of cash. Okay, already in the form of cash, 320,000. So the cash amount here you can directly enter into the cash flow statement under financing activities. Okay, so you just put dividends paid by the holding company. Okay, dividends paid by the holding company, total amount of 320, money going out. Okay, dividends paid by the holding company, money going out. So that one settled. Now let's move on to the second additional information. The second additional information here explains with regard to expenses account. So expenses account here is account in the consolidated profit and loss, which is the amount of 2220. So to facilitate you trying to explain what's going to happen, what is going on with expenses account, you can open expenses account, for example here, expenses account. Okay, so in the expenses account it explains that first, with regard to expenses, it mentioned that include in the expenses is the impairment of goodwill. That means they are telling you that there is impairment of goodwill inside this account. The amount is not certain because it does not mention. That will you have to find out later. And then you have also gain on disposal of non-current asset inside this account. Also, the amount is not mentioned. That will mean that you have to find it out yourself. And then also here inside expenses is depreciation of property, plant and equipment, which is 410,000. Now in this question, the way they answer this question is using indirect method. So indirect method means they start with cash flow statement with cash receipt from customer. Okay, cash receipt from customer. They do not start with normally if it is direct method, it start with profit before tax. Okay, so here they use indirect method. That means it's not in the operating activities. That means this one is you have to enter into property, plant and equipment, and also expenses account. Okay, so expenses account, here we have open up there is depreciation. Okay, depreciation, a total amount of 410. So depreciation here, the double entry is debit depreciation expenses in expenses account, and then credit property, plant and equipment, or accumulated depreciation. But in this example, there is no accumulated depreciation account in the balance sheet, so we directly enter it into the property and plant and equipment. So you have to open up property, plant and equipment here and put in a depreciation amount 410. And then you also need to put in item which is inside the expenses. Number one is there is an impairment of goodwill. So debit expenses here and credit goodwill. So the goodwill here, you have to open up credit goodwill impairment. Okay, but you do not yet know how much. You just put the item first. Okay, the item first. The next is gain on disposal. There is a gain of disposal. Okay, so that means they have credited expenses with gain on disposal. Credit profit and loss in the expenses, they put it in expenses. Credit gain on disposal, credit expenses, gain on disposal, and this goes into disposal of property. So you have to open up disposal, see, and then inside this disposal account you have a gain on the debit side here. Okay, put gain, but you do not know the amount. Okay, you do not know the amount. Just put the item gain here. Okay, and also gain in the expenses, the item only. Okay, so that is with regard to additional information number B. Okay, additional information B. Additional information C. On 1st October X5, H acquired 80% interest in another subsidiary SS. Okay, another subsidiary SS by issuing 800,000 ordinary shares with a market value of $2 each. Okay, that means about 1,600,000. 1,600,000. Okay, total amount of 1,600,000. But we are actually is not very interested on that lah. We are interested in the cash involved upon the acquisition of SS here. So additional information further explain that the holding company also paid 400,000 in the form of cash. So this one is the one that we interested in. So this is purchase consideration in the form of cash. This is money going out. So the money going out, we know that it is 400,000. And then the additional information further give additional information with regard to the net asset of the subsidiary. So the reason why they give you the net asset of the subsidiary is that you can calculate how much is the the net asset of the subsidiary, and then to how much of the goodwill that you need to calculate. Okay, because from here you can calculate goodwill, net asset, compare with the purchase consideration, you will get goodwill. So here, okay, when they mention this amount here, property, plant and equipment, this amount on consolidation will be consolidated with the property, plant and equipment of the group. So for each of these item in property, plant and equipment, inventory, trade receivable, bank account, and also trade payable will be consolidated in the consolidated balance sheet with the group property assets. Okay, but before we move on to that, let's take a look at the main reason that we need to the main point that we have to calculate here is with regard to acquisition of the subsidiary during the year is that we need to find out first what is the net cash inflows or outflows. Okay, so the cash outflow here is 400,000. Okay, 400,000. Cash outflow here is 400,000, and cash inflow will be in the form of bank account. Okay, bank account in the SS, subsidiary SS, which is 350. So cash inflow would be 350, cash outflow is 400. That means the net cash outflow is, we have an outflow of 50,000 net cash outflow. This amount will go into your statement of cash flows in investing activities. So you have acquisition during the year. Okay, acquisition during the year. Total amount of 50,000, money going out, net cash outflow. Okay, so settle one thing. Okay, the other thing that you need to calculate here would be the goodwill. Okay, so here you can calculate goodwill by comparing the net asset. So the net asset here is stated here. They stated this way so that they want to test you whether you understand how to find the net asset. So net asset is actually the net asset on the date of acquisition. This is the net asset on the date of acquisition. So the net asset on the date of acquisition here, the trade payable here, they give you they do not put a bracket denoting a negative figure because they want to test you whether you understand or not. So the net asset will be asset, all the asset minus all the liabilities. So assets, you have all these assets. The liabilities, you only have trade payable. So asset minus liability, that means the net asset of the subsidiary SS on the date of acquisition is 1750. This is 100%. 100% net asset of SS. Now, remember in the additional information, it mentioned that the holding company acquires 80%. So 80% of this amount, that would mean that the value is 1,400,000. 1,400,000. And the purchase consideration paid by the holding company to acquire this 80% of the net asset is 2 million. 2 million consists of, which is OSC, 800,000 times 5, that gives you 1,500,000, 2 million 800,000. Purchase consideration is 800,000 times 2, times 2. $800,000 times 2, 1,600,000, and cash of 400,000. Okay, 400,000. That means you are the holding company is paying 2 million. So then the worth of 80% of the net asset of SS is actually 1,400,000, but the holding company has to pay 2 million for it. That means the holding company paid a premium on the acquisition of SS, a premium of 600,000. This premium is goodwill. Okay, so goodwill on acquisition here is 600,000. Okay, 600,000. So at the same time here, you have to remember, since this is 100% net asset of S on the date of acquisition, 80% belongs to the holding company. The other 20% belongs to NCI. So NCI here is 20% of 1,750, which is 350. So you have, from this information alone, you have many other information you can calculate. Number one, goodwill. You can calculate goodwill and also NCI. Okay. So for goodwill, you have to open up goodwill. We have opened up goodwills before this, the goodwill account, which is here. That means goodwill balance brought down is 200. This is inside your balance sheet. Balance carried down, this is inside your balance sheet also, which is given in the question. Balance brought down and carried down. And then this acquisition, goodwill on acquisition, is the one that we have calculated, 600,000. Goodwill will be debited in the consolidated balance sheet. So it will go into the consolidated balance sheet. 600,000 is the goodwill debit, and credit the investment. It will be eliminated on consolidation against investment. Okay. So the balancing figure you have here, okay, goodwill. Okay, so here you have on the debit side 800, on the credit side 580, which is not balanced. So the balancing figure is 220 on the credit side. What makes it decrease? On the credit side is decrease. What makes goodwill decrease? Impairment. Okay, impairment normally. That makes goodwill decrease. So this amount, the balancing figure, is actually the impairment. The impairment is entered into expenses account. Okay, remember, the impairment is entered into the expenses account in additional information B. Additional information B mentioned only the item impairment goodwill, but it does not mention the amount. So here we have found that the amount to be 220. So it will be entered then. Maknanya debit expenses, credit goodwill, 220. So that is with regard to goodwill. So the goodwill here, the amount that we find. And then in terms of NCI, you also need to open up NCI account. Okay. So here, NCI, non-controlling interest. Okay, non-controlling interest, you have acquisition during the year, okay, which is 350. Okay, credit and NCI. Acquisition during the year, it will be credited to an NCI. Credit NCI, debit investment in SS upon acquisition, okay, or on consolidation, elimination process. Okay, so that's it. And then NCI, the balance brought down, it is mentioned in your balance sheet, 550 in the question, and the balance carried down 1150. Okay, 1150. Yeah. So at the same time here, you will find out that in the profit and loss, you have an NCI of 370 in the profit and loss, consolidated profit and loss, given by the question, which is here, 3750. So if you enter that in your NCI, you will get a balancing figure of, on the debit side here, which is actually the cash dividend paid to NCI. Okay, dividend paid to NCI. So this amount, dividend paid to NCI, you can directly enter into the cash flow statement under cash flow from financing activities. Dividends paid to NCI, a total amount of 120. Okay, 120 money going out. Okay, that is with regard to NCI. Okay, apart from this, for assets that is acquired by the holding company, all these assets here will be entered into individual asset account and also liabilities account. Okay, liabilities account. For example, you have property, plant and equipment. Property, plant and equipment. Here, property, plant and equipment, you have to enter into on consolidation. It will be consolidated into the balance sheet of the holding of the group. Property, plant and equipment. Okay, on the debit side, you have 1 million. Okay, on the debit side. Apart from property, plant and equipment, you also have inventory. So you have to open up inventory account. Okay, inventory account, balance brought down, balance carried down, and then you have acquisition during the year. Inventory acquisition of SS will be entered into the inventory. Okay, so this is because for more details, actually, balance brought down here will be balance brought down of holding and S. Balance brought down of holding plus S. Okay, and even holding plus S. So during the year, you have to add acquisition of SS for inventory. Okay, so that's why you have to add there. So now you have inventory not only consists of H plus S, but also SS. Okay, but also SS. So when you have put in the figure here, okay, for inventory here, since we are using direct method, normally we're going to find to calculate. You have to calculate the figure for cash received from customer and also cash paid to supplier. Cash receipt from customer and also cash paid to the supplier. So to calculate that, you need information with regard to cost of sales. Okay, normally cost of sales will be debited to the profit and loss or the trading account and credit to the inventory. So this on the inventory side, cost of sales. On the credit side here, the amount on the credit side here is the cost of sales. So the cost of sales, the information I've got to the cost of here will be in the profit and loss, group profit and loss, which is this amount. Cost of sales 6,000. That will be inside inventory. Okay, cost of sales. So debit profit and loss and then credit inventory. So that means here you have a balancing figure. This balancing figure is actually the purchases during the year. Okay, the amount which increases inventory during the year here on the debit side is purchases. This normally purchases, assuming that all purchases is on credit. Therefore, this is entered in a trade payables. Okay, trade payable, purchases on credit entered into the trade payable. Okay. entered into trade payable. Okay, so that is for inventory. And then you have to also put in trade receivables that you have acquired from SS. That will be in trade receivable. So you put in the balance brought down, balance carried down from the question, and then put in acquisition of the subsidiary during the year. In terms of inventory, 250. So for trade receivables, normally you have to find amount of sales, because you need to find cash paid to cash received from customers. So sales figure here would be on the debit side of trade receivable, debit, trade receivable, credit, sales. So sales amount is inside turnover here, inside the consolidated profit and loss. So you have sales, and the balancing figure for trade receivable here represent cash received from customer. So this is the amount which is entered here. Okay, entered here. Cash received from customers. So settle with regard to trade receivables. Bank, we put the bank 350. We have settled that earlier. Okay, we get the net increase, which is 50,000, and already put into the cash flow statement, acquisition of subsidiary during the year. Okay, this amount in investing activities. Trade payables, you have to put in trade payables amount, which is 150 trade payables. Okay, acquisition of subsidiary, credit, trade payables 150. Balance brought down, get it from your question, and then balance carried down also from your question on the balance sheet. So the balancing figure on this side represent the cash which is paid to the supplier in terms of purchases. You pay to the supplier. So the amount paid to supplier is this amount, total amount of 6110. Okay, 6110. That will be entered into cash paid to supplier, 6110 here. Okay, 6110. Okay, and that's it for each individual assets which is acquired from SS. Okay, next, additional information, part D. H acquired 20% interest in another associate by way of payment of cash. So this is acquisition of associate company, and the holding company acquired 20% of this associate company by paying a cash of 100,000. So this is cash payment can be directly entered in the investing activities. Okay, acquisition of investment in associate company. Okay, investment in associate company, payment 100,000 cash, money going out. Okay, money going out. So settle that. Money going out 100,000. Okay, now the next is additional information E. During the year, property, plant and equipment of a carrying amount of 750 here was sold for 850. So this amount 850, it was sold for cash lah. So this is the cash amount. You can directly enter it into investment activities, because this is sales of non-current asset. Sale non-current asset, you receive 850,000. Okay, so this is actually disposal. And remember, in additional information part B, there is a gain on disposal. Okay, gain on disposal, the amount is not given, so here we can find the amount by deducting 850 with the carrying value of 750. Okay, so if you want to open up disposal account, you can open up disposal account, which we have opened before this. So here, disposal, the double entry is when you dispose property, plant and equipment, you will take out the amount from the property, plant and equipment. This is going to disposal. Okay, debit disposal, credit property, plant and equipment. And the amount of cash you receive is 850, which is we have recorded in cash flow statement, investing activities. Therefore, the amount of the balancing amount is 100,000. This is the balancing amount, 100,000 balancing figure. Okay, so this is the balancing figure. So expenses, the gain on disposal is entered in the expenses account. So the one that we have open, expenses account, we just put the amount here, disposal, which is 100,000. Okay, 100,000. Okay, so settle with regard to property, plant and equipment, and also expenses here. In the profit and loss, consolidated profit and loss, the total amount of expenses is 2220, the amount which is already in the profit and loss here, which is 2220, debit expenses. Okay, debit profit and loss, and then credit expenses, the amount of expenses. We're going to close the expenses account to the statement of profit and loss, 2220. So the balancing figure here represent expenses paid with cash. Okay, this represent the balancing figure represent all expenses which is other than depreciation, impairment of goodwill, gain on disposal, other than that. And this is the amount of cash which is paid to other expenses. So it includes here other expenses, which is this amount. Okay, this figure. Okay, so total cash paid to supplier and employees and also other expenses paid is 7800. Okay, 7800. Then we finished with regard to additional information. So the next step you need to do is you have to go to the balance sheet, the group balance sheet, and investigate all item one by one, so that you know that you have not left any item unchecked. So the first one here, we have property, plant and equipment. We have checked property, plant and equipment. We have opened up property, plant and equipment, and we found that we have balance brought down, balance carried down, and then we have depreciation. Okay, and then we have also disposal and also acquisition of subsidiary during the year. So the balancing figure here represent what makes the property, plant and equipment increase in terms of value, or the double entry is on the debit side. So normally on the debit side, it could be that number one is if you have acquisition of property, plant and equipment during the year. Number two, it could be revaluation. But if there is a revaluation, there would be also a revaluation account in the CBS. So if you take a look at the CBS here, there is no revaluation account in this portion, no revaluation account on the reserve. That means there is no revaluation with regard to assets, including property, plant and equipment. So the only reason why it has increased by 2980 is because there is a purchases of property, plant and equipment during the year for cash. So this amount here will be entered in the investing activities. Purchase of property, plant and equipment, 2980. Okay, 2980. So for property, plant and equipment, settle. And then investment in associate. Okay, for investment in associate, we need to find actually the dividend received from associate. We have opened associate companies investment in associate company account. So here, put in the brought down figures and carried down figures. And during the year, we purchased acquisition of associate company, 100,000 paid with cash. Okay. Therefore, the double entry normally debit investment in associate, credit cash. So we have entered here. Okay. And then on consolidation, we recognize profit or income from associate company in the profit and loss. So in the profit and loss given, there is share of profit from associate company, which is 70. So credit consolidated profit and loss, that credit associate company, okay, debit investment in associate company, and credit consolidated profit and loss, 70. So the remaining figure here, which is the balancing figure here, represent dividends received from associate company. This is the amount that going to be entered in the cash flow statement under financing activities. Okay, dividend under investing activities, dividend from associate company, 50,000 money coming in. Okay, so settle with regard to associate companies. Goodwill on consolidation. We have opened up goodwill account. Okay, our goodwill account. We have opened up and found out there is an impairment, so settle that. We have settled that also. And with regard to inventory, we have also settled that when we found that there is purchases. Okay, purchases here. We settled that inventory. And also trade receivable, we also have settled that trade receivable, where we found that there is amount paid received from customer, trade receivable here. Okay, cash received from customer, 9950. So settle with regard to trade receivable. Bank balance, we have also already put inside the cash and cash equivalent. Okay, the amount we have to investigate. Okay, the bank balance. And then we have ordinary share capital. So ordinary share capital here, there is an increase. So for OSC, you can open up OSC. Balance brought down 2,500 and balance carried down 4,900. So there is an increase. The first increase would be in the form of purchase consideration paid to SS when the holding company acquire SS. The holding company issue ordinary shares of 1,600,000, including share premium lah. Okay, including share premium. So the balancing figure here, okay, you have 4,900. The balancing figure here is 800,000. So increase in ordinary shares during the year with regard to the balancing figure here. What makes it increase? Of course, it could be bonus issue, it could be rights issue, it could be new issue of shares. Kan? So if it is bonus issue, it does not involve cash in bonus issue. If it is bonus issue, that should be inside profit and loss or consolidated profit and loss. But there is no information with regard to bonus issue during the year in profit and loss. So it could not be because of bonus issue. And also, it could be a rights issue or new issue of shares. It could be in form of rights issue or right or a new issue. So here there is a new issue of 800,000 inclusive of share premium. Okay, so this can be, and this is the in the form of cash you receive when you issue new shares. This can be entered into the consolidated cash flow statement. 800,000 issue of shares during the year, 800,000, money coming in 800,000. Okay, that is with regard to ordinary shares. Retained profit here, you do not have to investigate, because we're going to investigate the consolidated profit and loss one by one. For non-controlling interest, we have already investigated non-controlling interest, where we found there is a dividend paid to NCI to this amount 500 and 550. So that has been settled. Okay, NCI. And then we have, after this is debenture. Okay, debenture. So there is an increase in debenture. So what makes an increase in debenture here? An increase of how much? 200. So the increase in debenture could probably be because there is an issue of new debenture during the year for cash. So this amount of 200,000 cash could be entered in your consolidated cash flow issue of debenture, which is 200,000. So settle with regard to debenture. With regard to trade payables, we have already settled trade payables, because when we open up trade payable, we found out that there is an amount which is paid or to the suppliers. Okay, cash paid to the suppliers, the total amount of 66110. So settle all the items in the balance sheet. Now we're going to look into items in the consolidated profit and loss. Turnover, we have settled turnover in the sales for when we calculate trade receivables. For cost of sales, we have settled cost of sale when we calculate the inventory account for inventory, where we want to calculate the purchases. And then expenses, we have already settled that, so you get operating expenses. Okay, settle. And then share of profit, we have already settled when we want to calculate the associate company account. Then you get profit before tax. And then tax for the group, which is 280. Yani you kena siasat tax, because the tax inside your profit and loss, it could be based on accrual. Normally profit and loss based on accrual. Okay, accrual basis. So you need to find the amount of cash cash paid for tax. So to do this, you need to find if this is not cash, then there will be accrual or prepayment of tax. So you have to open up tax. So here, if you open up tax, here I open this tax account here. Balance brought down in the balance sheet is 0. No, there is no mention that there is tax brought down or carried down. And the amount charged to CPL is 280. That means the amount of cash is also 280. So that means that the amount which is stated in this cash consolidated profit and loss is also the amount of cash. Okay, so this amount of tax paid is entered in operating activities. Okay, tax paid 280. So this is consolidated profit and loss and tax paid. So you get profit after tax, profit attributable to equity holders, and then non-controlling interest. Non-controlling interest, we have calculated NCI account. We found that there is dividend paid to non-controlling interest. So settle with regard to CPL. So everything has settled. That means you have settled all the amount. So amount inside your cash flows has been completed. So here you can prepare your cash flow, your title here. Cash flow from operating activities, you have cash paid to cash received from from customers, cash paid to supplier and other cash payment, and then tax paid. Net increase of 1870. For cash flows from investing activities, you have acquisition of subsidiary, and then sale of non-current asset, cash inflow, cash outflow for purchase of non-current asset, property, plant and equipment, and you have purchase of investment in associate company, cash outflow of 100, and dividend received from associate company, cash inflow of 50. So total 2230. And cash cash flow from financing activities, you have issue of new shares, and then issue of debentures, and dividend paid by the holding company, and dividend paid to NCI. The net is 560 net inflow. Minus plus minus, you get 200,000, which is the same amount of what we have calculated in cash and cash equivalent. So that means your cash flow calculation is correct. Cash at the beginning 450, so you get cash at the end 650. So this is explaining the increase in cash flow of 200,000 here. So the increase comes from cash inflow of operating activities 1870, cash outflow from investing activities 2230, and cash inflows from financing activities of 560. That's why you get 200,000 increase. Okay, by looking at this a lot of this amount of cash inflow comes from operating activities, and a lot of outflows come from investing activities. So that's all for indirect method for acquisition of subsidiary during the year. So the next session we're going to discuss disposal of subsidiary during the year using indirect method. So that's all for today for this session. We'll see you for the next session for the next video tutorial. Assalamualaikum.